Y'all, welcome back. I'm Raymond Dahlman, president of DSA Financial Group, and this is the weekly wrap up for April 9th, 2021. Hope everyone had a fantastic week. Kind of an interesting week in politics and in the markets. Not good, not bad, just kind of, trudging along. So let's go ahead and take a peek at some of the headlines here in the economic news. First one here, U.S. producer prices rise more than expected. I know I've talked a lot about inflation recently. That's certainly something that with the increase in the money supply is something that we do need to stay on top of. So that's certainly something to pay attention to. Dow hits intraday record. Yeah, it looks like we're hitting a lot of records right now, just due to a lot of the influx of cash into the market and just some optimism with people getting back to work. Gold sinks 1%, but it's still on track for a weekly gain. Costa Rica inflation. All right, so let's take a look at, even though the market is still open right now, it's about 1:15 Mountain Time. Let's take a peek and see how the indexes did this week. So the Dow Jones, kind of a bit of a trough here in the middle of the week, and looks like we're finishing off strong. Let's take a look at the S&P. Looks like a fairly strong week. Didn't really dip too much midweek. Nasdaq had a really strong yesterday, and today seems to be doing the same. Let's look at the Dow Utilities, fairly flat, and the transports looks like they're down for the week. So all in all, not a horrible week as it stands. Let's take a look at gold prices. Looks like they peaked pretty much yesterday afternoon and have fallen off a little bit. Silver prices, basically the same. And for those of you who are crypto guys, Bitcoin looks like it kind of troughed in the middle of the week around 56,000. And now we're back up to around 58,000 as of this recording. So all in all, not a whole lot of up or down, just kind of sideways, kind of to be expected. Let me go ahead and close that. Let's take a look at the jobs reports that came out. Oh, that's the wrong one. Initial jobless claims came in at 744,000 this week. We were forecasting 680,000. Let's take a peek at last week's numbers. They came in at 719 and were revised up to 728. So there is still a gap, it appears, from the forecast to the actuals. Let's look at the continuing jobless claims. Came in at 3.734 million. The forecast was 3.65. Again, came in above forecast. Let's see, and actually last week was revised down a little bit down to 3.75. So an improvement, but again, if you look back historically over the last couple of years, we still have a lot of people out of work, and that is definitely what gives me some real concern. Talking about consumer prices, this was the report that came out today, the core CPI. Year over year, and it looks like it is climbing. It came in at 3.1% for this month. So if you look back over the course of to last summer, inflation has been climbing up. I know the Fed is wanting to keep inflation around 2%, but we'll see how high inflation gets before the Fed acts and starts raising interest rates. I know their comments that they've made have said that they have no plans for the next year or so to do anything with rates. We'll see if the rate of inflation has any real effect on that. So I also have the Fed minutes that came out from last month's meeting on March 18th. Let's see some of the highlights. Undertake open market operations as necessary to maintain federal fund rates in the target range from 0 to 0.25%. Increase the system open market account holdings of the Treasury securities by 80 billion per month, and of agency mortgage-backed securities by 40 billion. I think I covered that in a article I read through last week or a few weeks ago. Increase holdings of Treasury securities and agency mortgage-backed securities by additional amounts, and purchase agency commercial mortgage-backed securities as needed to sustain a smooth functioning of markets for those securities. Conduct repurchase agreements. Conduct repurchase agreement operations to support effective policy implementation and smooth functioning of short-term U.S. dollar funding markets. Conduct oversight of reverse purchasing agreement operations at an offering rate of 0% with a per counterparty limit of 80 billion per day. Rollover all auction principal payments back into the Federal Reserve holdings of agency debt and mortgage-backed securities. Allow modest deviations from the stated amounts for purchases, and engage in dollar roll and coupon swap transactions as necessary to facilitate settlement of Federal Reserve's agency MBS transactions. So that's a lot of stuff. I will attach this to the show notes. It's a PDF, so it looks like it's about 13 pages, so you can feel free to read through that. And then the last thing I had is a recording. Comes from the Tom Woods Show. Tom is probably one of my favorite people when it comes to the economy, to politics. Let me warn you, he is a libertarian like me, but they are some of the best people in my opinion. We're better than the liberals on liberal topics, and we're better than conservatives on conservative topics. That's kind of the way I look at being a libertarian. We are the best of all sides, and so people can learn some things. So anyways, this podcast covers the economic fallout of 2020. And let's go ahead and take a minute and listen to, they're covering a book in this podcast. Tom is interviewing a gentleman who has written a book about this, John Tamny. And so let's go ahead and take a listen.
First of all, it's really important to get a counter narrative out there because, as we all know from the past, whether it's 2008, or even something like the Great Depression and the New Deal, once the official version of events is solidified in people's minds, it's very, very difficult to dislodge. And we're still fluid enough in the current circumstances that an alternative point of view may still have a fighting chance. So I'm really glad you did this. Now, your book places a lot of emphasis on the economic side of things. It's not so much an analysis of should they have imposed this mask mandate at this time in this state, and what were the results compared to other states? That's not the kind of book you've written. What is the kind of book you've written?
Yeah, no, I wrote this one on purpose. And let me first say what you're talking about in terms of narrative is crucial. And that's why I hope you still write a book, because you're right. The 1930s are still being misreported. 2008 is still being misreported. And so it's essential that our side gets these truths out there so that we can have a say in how the history is written. Now, I wrote an economics book because to me, this is an economic story. It's simple as that. Unless we make it an economic story, because that's what it is, history books will say that a virus caused a global economic contraction. No, panicky politicians caused a global economic contraction. And so lots of people will write about whether the virus was a huge health threat, whether some will say it was a very small one. Interesting points of view on both sides. I think the more crucial story to tell is that politicians responding to a virus chose economic desperation as the strategy to fight it. Historians will marvel at the abject.
All right, we'll go ahead and stop that there. So, like I said, it's an interesting listen. It's about 20, 30 minutes. I always listen to podcasts at 1.5 speed. And the Tom Wood Show that's a pretty good speed to listen to his podcasts. Some of them you got to slow it down a little bit, like your Ben Shapiro's and your Tim Pools and some of those fast talkers. But, anyways, like I said, it's an interesting listen. Certainly goes through some of the failures of government over the last year. And anyone who knows me knows I have a strong disdain for the government. They pretty much do everything poorly. Everything from the post office to the military. It's a complete screw up. So, but we can hope that, everything that's going on right now will lead to the impending doom of the U.S. federal government, and we can start over maybe with something a little less tyrannical. So, anyways, hope everyone has a fantastic weekend, and I'm going to be doing some traveling, but I will be checking in on Monday with my weekly update. But I will not be in Colorado, so I will be on the road this week coming up. So if anyone needs to reach me, there may be a slight delay in getting back to you, but I will have my computer and my phone with me where I'm at. And if you need anything, just shoot me an email or give me a call, and I'll be happy to take care of anything that you need. If anyone has any questions, comments, or concerns, feel free to shoot me an email or give me a call. Always welcome feedback, and hope everyone has a good weekend. Bye-bye.